as Ina was saying, not only is it a nice sunny day here in Latvia, but we're also sitting in the middle of what's now the fastest growing economy in the European Union, with GDP growth for the first quarter of this year at almost 7%, which is roughly twice what analysts were forecasting at the end of last year. So that is in itself a remarkable and a very happy achievement, and we're doubly happy to have here this evening the man who did it, the man who made it possible, the Prime Minister, Valdis Dombrovskis, and the man who I think gave him a lot of valuable advice and sinew-stiffening support during that time, what can I call you, Anders? The legendary economist, the economist without frontiers, Anderšs Oslund. So Anders is going to give the initial presentation, which will be of about 10 minutes. The Prime Minister will then make an intervention, and we will then hear from Gabriele Giudice, who is the head of the EU mission here, and from Mārtiņš Kazāks, economist at Swedbank. So I will hand the microphone over now. Oh, you've got one of your own to Anderšs Oslund.
Thank you very much. It's very good to see you again, Robert, and thank you very much for organizing this, Ina. This has been a true pleasure to work on this book, and of course, when we wrote this book, we were quite convinced that this is working, and today we have seen 6.8% growth during the first quarter of this year. This is what you would expect when the economic policy is right, and there has been a big output fall, there's free capacity, it should come back, and now we are seeing that it's doing exactly as it should. And I'll try to give here, you briefly here, our fundamental thesis in the book. And I'm very happy that we have copies now in Latvia, and they are available, so there should be books, I think, for all of you. And I've taken out here 5 theses which I think are fundamental. Latvia's output fall was caused by a liquidity freeze and not by austerity policy. Devaluation, as you all know, is no salvation for a small, open economy which has a lot of euroization and therefore currency mismatches. Third, this was a radical crisis resolution, and that has turned out to be good economically, and it was also good politics. And as a consequence of this, we are now seeing earlier and higher growth than anybody had expected. So I'm very happy that the Statistical Office of Latvia today delivered the right results so that we can all cheer it. This is a brief but very fundamental point. Latvia had massive overheating before the crisis, with large credit increases, inflation. Remember that the gross wages at most increased by 33% in 1 year. And therefore also a big current account deficit. But then all of a sudden there was no international liquidity available. What happens? You get what economists call a sudden stop. And it was this total liquidity freeze that caused the output fall. And therefore austerity was caused by the output fall, because state revenues always fall more than output. And austerity was then caused by the output fall and not the other way around, which is quite often understood to be the case. The second point that we elaborated on a lot at the time, it is that devaluation is not a solution to this situation. Remember Paul Krugman's word in December 2008, Latvia is the new Argentina. And just think of how stupid things some intelligent people say because they don't bother to inform themselves about the actual situation. So what I should emphasize here is that devaluation could have been uncontrollably large because it's a very liquid market. A devaluation would probably have been 50 to 80%. We have just seen Belarus devalue by 70% last year, What is the consequence? Wild inflation. Belarus had 110% inflation last year, and it turned out that Latvia's big problem was 4.4% inflation last year, which is not a big problem. But it's considerably better than 110% inflation. And also, with the devaluation, you get less reform pressure. The bank system would have collapsed, and there would have been mass bankruptcies. And the real foreign debt would have at least double in such a situation. Who would have benefited? Exporters. Who would have suffered? The people and the state. Because what is LAT used for? It's used for paying salaries, and it's used for paying taxes, and it's used for pensions, while the exporters would have benefit. So the conclusion is that no exchange rate regime could have salvaged a small open Latvian economy from the overheating. And we can compare Estonia, that pursued much better policies before the crisis, and even so they were hit quite badly. And instead, the fixed exchange rate regime saved Latvia from collapse of the bank system, mass bankruptcies, and a doubling of the foreign debt, and it facilitated vital structural reforms. So this is really a case showing that it was the right thing. And then, out of spite, I drew up this one. You hear that the comparison with Latvia and Argentina, and here I've drawn up where there are in terms of GDP at the same time. Latvia, from 2001 to 2011, or 2000 to 2011, had a growth of 51%, which is not bad, and that's through the crisis, while Argentina, in the similar decade, had a growth of 16%, which is nothing to write home about, if you have had a 16% growth in a decade. So there are totally different outcomes coming out of it. On internal devaluation, well, the point here is really how front-loaded this was, and that it was a crisis resolution that was resolute. That's what a resolution should be. And did what was necessary, and as a consequence of this, confidence was restored by June 2009. And here you can see two things about the fiscal consolidation. It was front-loaded. Most of it was done in 2009. And it was the blue part is expenditure cut. It was altogether 2/3 expenditure cuts and much less revenue measures. People don't like paying more taxes when they get less from the state. That's the simple logic behind it. And what is also quite important is that this is good politics. We were just in Stockholm at a conference that Anderšs Oslunds had organized together with the IMF, the Swedish Minister of Finance. And what came out of this conference of fiscal adjustment. Well, with this big real output shock, people realize that something has to be done. That's when you should act, when people understand it. And when they saw a comprehensive and front-loaded program, they understood that this makes sense, that this brings about confidence early on. More expenditure cuts than tax increases drove structural reform. If you're cutting by 2%, then you can cut even. If you're cutting by 10% in a year, then you can't cut evenly. You have to choose what you cut and what don't you do. And in order to make that possible, you have to undertake structural reforms that make the public sector leaner and more efficient in the future. And very importantly, international support was needed, and it was forthcoming. And here I might emphasize that the European Union did provide money in July 2009, while a certain other organization, Mark, was slightly late in providing assistance. That it was really the European Union that came...
We came out straight away, like in 2 days, and in terms of assistance, we learned pretty quickly. The Riksbank also played quite a role, but we learned pretty quickly.
I'm talking about summer 2009.
That was a different one. That's interesting.
Yeah. And then it's quite important with good salesmanship and that there was equity. That the salaries of the top officials were cut more than those of poorer people. There was an attempt to cut the pensions, but not by much. It didn't happen. But it's quite important that the top people take something on themselves. And excuse me, Valdis, but I love your line from the spring of 2009. There are two alternatives. One is bad, the other is worse. I prefer the bad alternative. This is how it should be sold so that one doesn't get a euphoria, because this is a hard suffering and it should not be presented as something else. So then what we are now seeing is that Latvia is set for sound growth, as we saw today, and 5.5% growth last year, with good governance, competitive costs, solid export expansion, and fast rising investment. So here you see the ease of doing business. Latvia comes in 21st place in this World Bank index, Greece 100th place. Latvia has sharply reduced real unit labor cost by 16% in 3 years. And exports are now rising to the tune 25–30% at an annualized level. Probably we're now seeing a leveling off of it. And investment was last year back at 23% of GDP. Should be a little bit higher, but this is quite good. And you can see here by sharp contrast how in Greece, what Greece has really cut on is investment. This is not public, but total investment. And lessons from Latvia for the world, I think, are quite important and should be emphasized. One is that devaluation was neither necessary nor inevitable. To contradict Nouriel Roubini and Paul Krugman. The goal of Euro accession has been valuable. Early fiscal adjustment was preferable, and it's also elsewhere now. It's better to cut public expenditures than to raise taxes. International rescue should be large and front-loaded, but also demanding. I think that the review process was actually quite useful, all of which was not necessarily a very pleasant exercise. And it's a strange myth that democracy cannot cut public expenditures. All the 3 Baltic countries did similar things, showing that this was perfectly possible. And internal devaluation is possible and effective. And people treat Latvia as some very special example. I would emphasize that Denmark did this in 1982, Holland did this in 1987, that this is a good way of undertaking reform. So, thank you.
Anderšs Oslunds, who is the Senior Fellow at the Peterson Institute for International Economics. Anders, one point that you were too modest to make, but which I'll make for you, is that I think it was not only 1 or 2 pundits like Paul Krugman and Nouriel Roubini who were saying that you were bound for disaster, but just about every economist, every financial market analyst who looked at Latvia in those days contended that devaluation was not only necessary and probably desirable, but actually inevitable. And so you saw off the entire economic establishment there. Now, Martin will come later. So Prime Minister Dombrovskis, perhaps you'd like to take the microphone and tell us a little bit about what it was like to be in the driving seat then.
Thank you very much. First of all, I would like to thank European Commission representation for organizing this event, also for helping with providing printed copies of the book. Also, I'd like to thank Economists Association 2010 for organizing Latvian translation of the book. In fact, we were starting to think about this quite early on since the presentation of the English version. It was seen mainly for international audience on Latvia's experience of how to overcome financial and economical crisis, but there was also questions, okay, maybe it could be interested also for Latvian readers. Of course, we had to adapt the book slightly because you don't write about Latvia for Latvian audience exactly the same way as you write for international audience. And so that's why how we came to this Latvian version of the book. Also, we tried to do some additional analysis, which Anderšs already presented, on putting Latvia's experience in some Eurozone context, in a context of how some Eurozone, Southern European countries are dealing with economic challenges, and what are the lessons which could be learned from Latvia's experience. Well, just yesterday we discussed today's event with Anderšs, and so he was asking me, okay, after last year's presentation and the event we did last May, is there something you want me to emphasize? Was there something too controversial, which I was saying last time, and so? Well, to which my answer was not too much. Just as the very next day, that time President decided to dissolve the parliament, but apart of this, everything was okay. So now we also survived those dissolution of the parliament and early elections, but maybe let's move back to the really what is the lessons of the book, and what we see as the issues for the future. I think Anderšs covered quite good on some key lessons we think which are important. I think there were a couple of I would like to re-emphasize. First, really, it's this issue of front-loaded adjustment. We did bulk of the adjustment already in 2009, and really it was quite important that while front-loading this adjustment, we helped to adjust also help to restore also financial stability, because financial stability is precondition for economic growth. And once you stabilize your finances, once you regain trust in the financial markets, you can return to the growth. People can see what the real situation is and build from there on. Banks are getting ready again to provide credit to your companies and to your citizens. Capital is not fleeing the country, so really if you have financial stability, you can restore economic growth. And that's exactly what happened in Latvia. It took us more or less a year to restore financial stability between late 2008 and late 2009 with adoption of 2010 budget. And immediately we returned to the growth. In the first quarter of 2010 we returned to the quarter-on-quarter growth. In the third quarter of 2010 we already returned to the year-on-year growth. Last year we were the third fastest growing EU economy. Now we are the fastest growing EU economy. So really financial stability was a basis for this, and now there's lots of debate in Eurozone that austerity is bad idea, and certainly austerity is bad. I would not argue against this. But if you are already in a situation where markets are not trusting you, then it seems that there are not many alternatives. And in the case of Latvia, some supposed alternative of devaluation, even though what's interesting, it's often discussed that it's austerity or devaluation. Well, were the policy choices. But the point is that devaluation does not resolve your budget deficit problem per se. So you have devaluation, you have all problems associated with devaluation, and you still have to deal with austerity. So it's, I don't know why many economists would present it that it's either or. And in Eurozone countries, in fact, at least there's no this debate, because as long as a country wants to stay in Eurozone, there's no much scope for debate about devaluation. You rather need to concentrate right away on austerity, on structural reforms, on regaining the competitiveness of the country. I think that's first important lesson. Second, is to have a clear exit strategy. And of course, those exit strategies can vary, but if you have a plan and if you can show to the people, to the markets that, okay, that's where we're moving, it's also helping with a sense of purpose and understanding what's going on. In the case of Latvia, we set this euro adoption as an exit strategy. Well, by now, many people are questioning this exit strategy, and if you, for years, already hear everything you hear about Eurozone, it's crisis, crisis, and more crisis, of course, more people start asking questions. Is it really such a good idea to join Eurozone? But nevertheless, we have this exit strategy, and currently it seems that we are well on track meeting our Maastricht criteria this year in order to be able to join as of January 1st, 2014. So we stick with this, and we hope that the Eurozone will be dealing with their problems in an efficient manner, so that we will be able to join a Eurozone which is financially stable and ensuring economic growth once again. Then a couple of remarks on what we see as challenges from now on. I think one very important issue is to ensure sustainable economic growth. It's not only to have economic growth as some kind of goal in itself, but also it's to deal with problems of unemployment, which is still a substantial issue in Latvia, to deal with the problems of immigration, and it seems to be that really the fundamental answer to those issues is to ensure economic growth, to create new jobs, to give people feeling that there is potential, there are opportunities in Latvia, and there is no need to look around for opportunities elsewhere. Demographic situation remains a large issue we need to deal with, population aging, so now we're working also on some additional programs to actually facilitate birth rates, to improve demographical situation, because it's also very much linked with further prospects of the country and also financial stability of the country, especially if you look at the situation in a social budget. We need to do the certain adjustment given tendencies in population aging. In this sense, we are not very unique. Many European countries has it, but in case of Latvia, situation is particularly difficult. And we need to concentrate on attracting investment, supporting industrial production, because it seems that industrial production, export-oriented industrial production, is one of the key factors for creating more jobs. And there is another interesting factor. Often it's being discussed, okay, devaluation, it's very important to facilitate exports and to this way to facilitate economic growth. But if we look at the experience of Central Eastern European countries in the last years, it seems that exactly those countries which have fixed exchange rates have highest growth in exports. So it's evidence is exactly the opposite. So it seems that really this currency exchange rate manipulation, it's not such a fundamental answer. Fundamental answer is really to deal with structural imbalances in an economy and to address the real shortcomings, to deal with reducing administrative burdens, improving the business environment. In the case of EU, something we had been emphasizing, 12 prime heads of state and government together to the European Commission and European Council on using full potential of EU internal market, because according to the Commission's own estimations, it could generate at least extra 1% growth each year. So there are quite a few things you actually can do on the structural side. And now there is popular to discuss about, well, we have this fiscal compact, very nice. By the way, we just started the ratification procedure of fiscal compact, and we also need a growth compact. And I fully agree that we need a growth compact, but the question is, does a growth compact mean that it's more deficit spending? More deficit spending is probably not the answer. But there are quite a few things you can do on a structural side where you can facilitate growth and actually help countries to move out of the fiscal problems, because quite clearly you need to return to economic growth also to resolve your fiscal problems. So I do hope that this book will provide also some new impulse for a discussion here in Latvia, as it has done in international audience once it was published in English. So once again, thank you, Anderšs Oslunds, for trusting in Latvia's economy, for agreeing to write this book together, and for facilitating this debate on internal adjustment, on internal devaluation, both in global, among global economists and also in Latvia. So thank you very much.
Prime Minister, thank you. Now we have two interventions, one from Gabriele Giudice, the European Commission Mission Chief to Latvia, and from Mārtiņš Kazāks, the Chief Economist of Swedbank Latvia. So, Gabriele, what are your recollections of the crisis? Were you utterly confident throughout that things were following the right course, or did you have some nervous moments?
Well, first of all, thank you very much for inviting me. I had the chance to be able to come still another time to Riga, so it's very good to have this opportunity to comment on this very interesting book. I'm afraid I will not be able to read myself the additional chapter on the lessons for the other countries. I will have to ask for a translation, but will be probably very useful looking forward for myself. Now, I will not go into the positive things, because I think you have expressed them quite well in your book, and I think everybody who is here is aware about them. I would like to make a couple of comments on what you just mentioned into your presentation, just to draw a little bit of different nuances, and then you know, just give some messages looking forward on what still might be the challenge for the country. So on your comments, there was the first one which I think was about the austerity, that the austerity was caused by the output fall. Well, I fully agree that the output fall was the first one to come. Now, whether the austerity was by itself caused, I think that is assuming something, which is that, well, or missing one part, and therefore I would just not say that it was caused, but it was needed by the output fall. And the difference is that the fact that it was needed, it called for a reaction. And the important thing is that the reaction took place. And because you could have had the output fall without austerity. So it's not a necessity. So in that, I think there's a merit which needs to be, let's say, recorded and registered, that you know, the government took the courage to take measures which were not very different, which were very difficult. Of course, I think, and also I want to put Mark in the picture. I think the fact that we were there probably have supported you in your difficult choices, and therefore probably some merit has to go to the international institutions for delivering that. Now, another point is that about the confidence that you say that it was restored by June 2009. Well, I think I put June 2009, I think it's a little bit too early to say that. And in fact, as a minimum, I would say, you know, I would consider that the starting point where confidence came as at least March 2010, when in fact, the very important steps had been taken, not just the first one taking the first measures and announcing more, but the fact that the second budget for 2010 was also taken and it was implemented. I think at that moment we could say that the situation had changed. Until then, and I remember talking to a lot of investors here, they were all saying, very good, we want to see the budget 2010 first and then implementation. And if you look also statistics and indicators, you see FDIs coming in back to Latvia from the middle of 2010, really. So it was not as quick. Now, the role of confidence, of course, is very, very important, and the fact that a certain type of measures have been taken, it's I think, for me, a big proof of the role of confidence in the fiscal adjustment, and that's still something missing in the same economic theory. And I hope, I'm myself trying to work on that. I think I hope that there will be some developments in this area because it's really a major difference in terms of delivery. Now, one point which also came at the very beginning of your presentation is that you say that the crisis came because of liquidity and not because of austerity. Now, I differ a little bit from that because, in fact, the liquidity just exposed the problem. And the crisis came, in my view, because there was an overheating in the country for a very long time. Now, this is, in fact, what seems something which is a bit underestimated. And in fact, it's underestimated, and I'm afraid that I want to look a bit forward now in terms of what this might mean in understanding the origin of the crisis. Is that now, in particular, given the figure of today, there is, I think, it's very quick. The change of mind, let's say, that people start forgetting what happened in the past. And very quickly people can enter into a feeling of complacency or assuming that this time it will be different. Now, as I just experienced coming back to Riga, that not only there is heating today, but there's overheating in this room. So it can happen very, very quickly. Well, that's why we have to put on the air conditioning very quickly before there's a new risk of developing to new problems. So I want to just stress a little bit on this point. Basically, if you look at the statistics of today, if you look at the level of output, it's back to 2006. So this means that finally this crisis, first of all, basically led to a loss of 6 years altogether. And second, that we are back in 2006. And if you remember in 2006, the situation is not very different from now. The economy is picking up. The fiscal situation seems to be good. People start to ask here and there for more money, more tax cuts, give us back, we've done the effort and all this. So the feeling is that it's very easy to fall into a new attitude, let's say, in a complacency world. Now, this complacency might be very, very dangerous because this country has delivered on something, is back on its own feet in terms of being able to have access to the financial markets, but has to show that it can walk. And to walk and reach the other objective which the country set for itself, which is the euro. Now, I have the feeling that many are taking this assumption that the exit strategy of the program was the euro. Well, in fact, we always stress that the anchor of the strategy is the euro, and one has to then, once it is graduated from the program, it has to still deliver on the adjustment. And that, well, still something has to be done, and in fact, one has to be careful that, let's say, steps are not taken in another direction, which, let's say, do not give enough reassurance to the rest of the world that, in fact, not only you are not able to work because there was somebody holding you, but you're able to work on your own as a country. So I think there's still a necessity, and really hope that the lesson from this book and the lesson from this story is that looking forward, the country can actually show that all these achievements, which were done thanks to the government, but also with the support of external help, that in fact the country can do this on its own. And I think there's another year at least to show that things are going in the right direction, when now we will be much less present in terms of requirements and commitments. And I think nobody should give for granted that what has been done until now is already sufficient for the euro. Of course, you are really in a good direction, but something still has to be delivered. And therefore, I would really hope that all the success which has been achieved until now is continued, and then we can celebrate the next steps. Thank you.
And as Prime Minister, I'm sure there are some points in what Gabriele said that you'll want to come back on, but perhaps we could give the floor first of all to Mārtiņš and then deal with points together.
Thank you. Good evening. Thanks for inviting me here. I will not perhaps comment very much on the previous speakers because the discussion already was quite extensive. But I think one of the things that really need to be said is really kind of full respect to the Prime Minister for what has been done in these difficult years. But about the repercussions of this book, of course, in Latvia last year it was the dissolution of the parliament. Maybe when Greeks do read this book, then they see that they cannot replicate this, and then they just leave the Eurozone within a few months or something like that. But I would say, yes, especially the figures of GDP that we saw today, and what in fact we've seen late last year and early this year, they have been surprisingly good. The confidence in the economy, both of households and businesses, has been very good. But I would also say that we, of course, as Gabriele was saying, we perhaps have to be very careful. We should not get blinded by success. Okay? This is no time for complacency. The numbers are so good, 6.8, also because of the past base effects. When we will see the second quarter data is going to be significantly weaker. Okay? It's going to be perhaps in the range of 4 or 5%. But the economy will still be growing at a quite good speed. So what I would say is that there's no time for complacency, and one needs to boost optimum growth rates. If one takes a look at the capital base, it has been quite depleted during the recession years. As Anderšs was pointing out, current investment rates are rather good, but given what happened over the last years, are of course not sufficient. So there needs to be more investment in the output capacity that builds up exports, and we see certain industries are already fighting with capacity constraints. Okay, so this engine that has been pulling the Latvian economy over the last few years is slowing down. Then again, another important thing is, of course, if one takes a look at the fundamentals to boost economic growth. Even if you manage to fix them, it takes time for it to bear fruits. And that means that, you know, to have good growth opportunities, to have good growth rates a few years down the road, we need to implement these things now. And then the question is, what is the window of opportunity for reforms? And unfortunately, we've seen over the past years that elections, you know, the political cycle is rather strong in Latvia. And we know that next year in June, if I'm not wrong, we're going to have municipality elections. Then in 2014, we will have again parliamentary elections, which means that there is an opportunity window this autumn and the next autumn. Unfortunately, if one speaks of the reforms, then the reforms not only happen, as the Prime Minister has said previously, reforms start when the money ends, okay, which is very much true, but also reforms do happen only when they get reflected in the budget. Okay, so the motivational structure within the budget transfers these reforms into the economy. So this is the next year's budget, and this is the budget of 2014. If we linger on with these reforms, then that means that at some point the current momentum of growth will start to peter out, and then we will see rather slow growth rates. If the growth rates are slow, that means that the productivity growth is slow. If productivity growth is slow, wage growth will be slow. If wage growth is slow, we will have immigration problems, we will have sustainability problems. So the fundamental issue currently, the drive that the country needs to achieve, and what we very much see in the current government, the ambition level certainly is significantly higher than we've seen in the previous governments in terms of taking not the firefighting regime when you struggle with the crisis, but take a more forward-looking view, take a long-term view. We see that more in the current government, and that is very encouraging. And we've seen lots of taboos lifted
from different types of reforms. For instance, this same education reform, regional aspect, which was not mentioned, but I think is absolutely important in terms of how many regional centers do we have in the country. We need to narrow them down, okay, to concentrate financial and human resources. And these things have to be implemented very, very fast. And if they can be put into the next year's budget, then that means we are really moving ahead. If we don't manage to do this, then unfortunately, at some point we will see this growth rate coming down to, let's say, 2, 3%, maybe 4%. But that is certainly not sufficient for Latvia to solve the long-term problems of demography, of immigration, of pension system sustainability, and so on. 2, 4% growth is simply not sufficient. Currently, it is very good, and that is reflecting the very hard choices that were made over the last 2, 3 years. And that is very good. But unfortunately, it does not mean that we can continue growing at these rates for the next 5 years. So we simply have to shift the gears. If previously, in mid-90s, we were using a bicycle and then we got onto the motorbike, now we have to leave the motorbike aside and get into the car. And that, unfortunately, is very difficult. The good thing is that, at least as an observer, I see that the current government is much more ambitious in terms of long-term reforms. And that is very good. But unless these reforms don't get delivered, we are risking that within a few years' time, we will have again these problems that we start to forget about. Thank you.
Mārtiņš, thank you. I think it would be nice if we could have at least a brief moratorium against all these warnings against complacency. I mean, a couple of days of euphoria will be rather nice after all the bad news of the past couple of years. Now, if we're going to move now to a question and answer session, but allow me, if I may, just to pull out one question which I think was certainly there in Gabriele's remarks, and to a certain extent there in Mārtiņš's as well, which is that in the optimism of today, in the fast growth of today, you can see at least a germ of the sort of mindset which led to the last round of overheating from 2006 onwards. Now, obviously you can expect the main actors in the financial markets to have learnt something from the last few years, but it seems equally clear that the actors in the financial markets have very short memories, and they also have perverse incentives which can render those memories null. So rather than just relying on memories, are there now any institutional or structural changes in place which would prevent another crisis in the future like the one we've just emerged from?
Maybe I'll start comment on this. First of all, I think now it's clear that it's not only a crisis in Latvia. In fact, many European countries are struggling with the crisis and looking for the solutions. And one institutional change, what is in place, is this fiscal compact, which has been agreed and which says that countries should not have structural budget deficits exceeding 0.5% of GDP, or 1% of GDP if the debt levels are low and a couple of other conditions are being met. So, and that's, I think, quite a big difference from where we were before, because during the boom years, what that time government was saying, yeah, okay, we have double-digit economic growth, and yeah, our budget deficit is small, it's maybe 0.5% or something. And what do you want from us? It's all fine. Now, if there is this emphasis on a structural budget deficit, it's clear that if you have a double-digit economic growth, you shouldn't be in small deficits, you should be in large surpluses. And I think that's one quite important structural change which is now taking place, and I hope that EU, or at least those countries which signed to this fiscal compact, will be able to follow it through. And the same goes with Eurozone. Before the crisis again, in the Eurozone, the situation was that countries which are willing to join the Eurozone, yeah, oh yes, they have to meet Maastricht criteria. But then countries in Eurozone, well, they don't need to meet anything. There were no sanctions and control mechanisms whatsoever about how countries within Eurozone were performing. And I think not the design of Maastricht criteria is very wrong. I think it's more or less okay. One could question something about inflation criteria, but on debt and deficit criteria, I think it's just fine. But the problem is that countries were just not following it. And now there have been also sanctions and control mechanisms reintroduced or introduced in another form, and it makes sure that also countries within Eurozone have to stick with budget discipline. I think that's another quite important change. And something I tend to remind also in Latvia that whatever we do with the budget, and so we need to do it within agreed framework, because a part of this general framework, 0.5% of GNI fiscal deficit, we also have an agreement with Commission and IMF of improving our structural balance by 0.5% of GDP each year, which, for example, means that we should move from a budget deficit of estimated 2.1% of GDP this year to 1.4% of GDP next year. And sometimes questions are asked, so how comes it's 0.7 difference? Yes, but it's 0.5% structural improvement and 0.2% of GDP kind of a cyclical adjustment. So altogether we need to improve our balance by 0.7% of GDP. And it's also worth reminding that in 2014, 2015, we have to pay back bulk of the international loan, which means that it will be very important at which interest rates we will refinance it. And finance ministry's kind of estimates is that 1 percentage point difference makes some 38 million lots expenditure each year. Something certainly we are willing to avoid. So I think we should be very clear that we stick with our fiscal targets, also in order to reduce refinancing costs, and instead of just paying more for the interest, we can then put this money to productive use. So.
Yeah, I noted down 5 points here, mainly on what Gabriele said. On the confidence measures, I'm simply looking up on the measures there, but the CDS rates peaked out in March 2009. The market interest rate peaked in June 2009, then fell. The international reserves hit the bottom in June 2009. So then we saw a steady improvement. So this is what I mean. It's a sort of different interpretation of confidence we use. With regard to the liquidity, of course, the ECB did give the Euro countries liquidity, so therefore they faced a very different situation. Greece got liquidity, and we can say that today very clearly that Greece did not have solidity, so it shouldn't have been given the liquidity. And then the crisis would have happened much earlier. So in a way, you can say that the Baltic countries were happy that they had to face it, that they got an external shock, and it was for overheating indeed. It's a question, it's a bit of what comes first, the hen or the egg. It's the nature of the discussion. And then on the perspectives change, as you mentioned, that they change very fast. This is very much a reason why we wrote this book, because all of a sudden everything is solved, and the people don't understand that there was a crisis and the nature of a crisis. So what we have tried to do in this book is very much to do it blow by blow, so that people do remember the history. What was cause and what was effect? Because otherwise it's so easy to forget it. And another part of that is that we wanted to show that Latvia is not so different. The problem now when I discuss Latvia abroad is that people say, but that's Latvia. What relevance does Latvia have for us? It's totally different. Don't you understand that? And then they take one argument after the other. And this is particularly what we have done in the epilogue. bring out the political economy discussion of the Latvian crisis, showing that Latvia was not so different. Then a final comment, that is that when you are on the right trajectory and you have been beaten, you tend to stay on it. So I think that Martin's and Gabriele's comments here are very healthy. But these healthy comments make you stick to the right trajectory. And if you take each part of it, governments, politicians, they are afraid of getting a massive overheating. They look upon these indicators and they don't say, try to speed up as much as possible. They understand that you can't do it. There are a lot of things that were said before the crisis that you simply can't say today. People understand that it is wrong. And if you turn to the banks have been burnt. The concern with the banks now is that they are too slow in issuing credits and not the other way around. So it's a fair that you make these comments, but I don't think that we should be too worried. I agree with Robert on that one. So normally what you can see these other countries that have crises, Sweden, Finland, Denmark, Holland, after they got out of the crisis in the 1980s or 1990s, they've stuck on the right trajectory more or less for a couple of decades. But the unfortunate thing seems to be that people only remember for 30 years or so when they had a crisis. After that, they forget it, and they behave as foolishly as the parents did before.
Right, let's open up the discussion with some questions and some comments. You, sir, I think...
Okay, my name is Herwig Balfinger, Commercial Counselor, Austrian Embassy, here in Riga since 2007. So I've seen the last good years, the bad years, and now the better years again. One short political comment. It was fascinating how you did it, Mr. Dombrovskis, but I think if you did not have the Latvian people, but the Greek people, you nevertheless would not have succeeded. Because it was interesting to see how here, both in Estonia and Latvia, the governments who had required much of their people and taken money from them were re-elected. Whereas more south in Europe, this seems to be impossible. And the other thing is, we are now talking again and again about the structural budget deficit, but I see also another structural deficit in the Latvian economy, and that's the foreign trade deficit, because always as soon as Latvia got into better years, the import-exports was more and more diverse, and if I remember correct, in the last good year, the exports were only some 70% of the import. And do you see this risk coming again? Because this also means, again, money is going out of Latvia, which the country would need itself.
Thank you, sir. And then there was a hand over there. Was it you, Atis? Yes.
Yeah. Thank you. Well, I'm a member of parliament, a politician. This is fascinating for me. But I was first elected in the previous Saima, which was dissolved, and then re-elected. Now, I want to make a point clear that the parliament was not dissolved for economic reasons. There was no backlash in Latvia, and we were re-elected.
It was a joke.
And a reactionary party was thrown out, and a progressive party came in. Now, that's one point. But what I'm afraid of is this, that the rest of Europe might drag us down. This is the problem, not what you're saying. Because there seems to be a backlash in the rest of Europe. Look at France, look at Greece, look at the local elections in Great Britain, and even in Germany. So this could be a problem for us. So let me turn the tables a little bit. Thank you.
Okay, so first, certainly, what is important is can you get society more or less with you? And yes, for us it of course helped quite substantially that we had functioning social dialogue, that we created this reform management group with trade unions, with Employers Confederation, Chamber of Commerce, local governments union, where we were discussing and agreeing on those crisis measures. and not that they were not complaining and telling different things about government, but at least partly they were on board, and there was also understanding that, okay, we have a crisis, we need to react to deal with the crisis. Of course, the situation may have been different if trade unions would decide, no, we will not discuss, we will just pull people to the streets. Of course, then the situation may turn out quite different. So that's quite a fair point, and that's why we also attach such a large importance to this social dialogue, and where we, from time to time during this international loan program, had problems with our program partners because we agree something with our social partners, and then program partners are not happy, and we need to renegotiate it, and it's it's so sometimes we were kind of trying to derail our social dialogue, but. But that was a problem, that we had too many partners. Well, eventually we managed to balance it all. Then the second one on exports imports. Well, that certainly is a big issue, and now there are also some headwinds with oil prices growing, with energy prices growing, and we import basically all our fuel and also other energy sources. So it's a big issue for us. So that's why we are working so much to promote export-oriented industry, actually to balance it out. Because really now we see with economic growth picking up, we see again current account deficit widening again. So this is an issue, and we need to follow it up, and that's despite having for the last 2 years some 30% growth in exports each year, we still need to worry about current account deficit. So you're absolutely right. On the situation in the rest of Europe, well, that's certainly clear. We are in the same boat. And now we just need to follow. Maybe there are some comments or analysis from the European Commission in a sense what is happening in Greece. Can we expect a government? Can we expect how we can expect this development of the situation? Because as we understand, this month or next month they have already next tranche, something like 5 billion euros due, and if there's not a government, are you going to pay? So it's really a very dramatic situation, and certainly if things go wrong in Eurozone, we will have problems. So no doubt about this, and if Eurozone will be okay, we will be okay.
What can I say on Greece? I mean, in Greece, of course, we are closely following what is happening. There's been elections. We hope to have a government with whom we can follow up. Of course, we're expecting that what is necessary in order to recover and readjust the country is done. It's very demanding in terms of necessity for the country. And therefore we hope that this will be taken by the next government, hopefully under the current parliament. But it's totally open. I think discussions are ongoing, so it's not much I can say concerning Greece. Of course, we all know that how important it is for the rest of Europe, and that's why we are following very closely, and we are trying to give the support which is necessary. And there was a payment made today, for example, 4.2 billion. To cover financing needs which were immediate. So on Greece, I think we all can hope that the things develop in the right way, but we all know that it is critical. But we know as well how critical it was, the situation in Latvia 3 years ago, and finally it turned around. So I hope that that will be the outcome in that country. Now, I don't know, in France there was a question, but it was about what austerity and growth. What was your question exactly on this point? About what on France? New president. Well, new president, of course, we are happy having to go and to work with the new representatives and let's say new president of France. I think he's put some issues on the table. I think which are issues which were not unknown to us. But I think, as the debate has been also just the Prime Minister has been mentioned before, austerity and growth, they are not words which are inconsistent. In fact, they are very consistent. One can deliver growth by taking the measures which are necessary for the country. And very often this means tackling troubles which are, let's say, reforms which are having a major budgetary implication and which have been untouched for years. So that's very important. Of course, I think there is a scope for taking measures to support growth. The Commission has been proposing ideas like project bonds or other ways to try to put more oil in the system, let's say, in order to ensure more funding for investment. But moving in this direction doesn't mean that the problems of the country will not disappear in terms of dealing with the fiscal troubles. So that remains essential. Do I need to reply to the Prime Minister? Or no, I leave it on.
I have just a very brief one. Of course, to response to Attis, of course, if your rich uncle goes bust, then you're left with what you have, you know. So, of course, what happens with Europe very directly affects us. But there's also other very, very important issue, which is PR. I remember early 2009, when Latvia was having very, very tough time, and also the banks that were exposed to Latvia were having tough times. I was asked to visit hedge funds in the US, and I visited about, I don't know, 20 or something. And only about 4 or 5 of them really knew what is going on in Latvia. The others were just simply shorting. Everybody runs, so we join them. And I think what we need, of course, we need a very good story. We have to work on the story so that there is something to be sold. But I think we, as kind of evangelists, have to go out, you know, and spread the good word, just to say that we are different, that we are better, that we've done a lot, and we really have something to prove here. And that also, in hard times, helps out. So if we have very good image, it will certainly help us to grow better as well. And in these very turbulent times, we will get hit less, because financial markets are always out to look for a kill. Okay. So if they see that you are similar to the weakling, they will assume that you are a weakling. We don't want to be weaklings. So we have to be strong, and we have to show that we are strong. Maybe sometimes even a bit better than we are. So it's certainly helpful.
Point over there.
Thank you. Carlos Bukovskis from the Latvian Institute of International Affairs. I have a, well, for all the panelists, rather a tricky question. You have been speaking about and the book talks about the success of internal devaluation, and I have a rather, well, simple question, is how do you think, what was the role of the, well, of a large proportion of the shadow economy in this country in the success and in political, well, the political success and stability of political system in this country and, well, in implementing the austerity measure? Thank you.
That's a big question. Any other questions before we put on to the Prime Minister?
Okay, so as regards shadow economy, well, I'm not so sure that it was so much part of the solution as part of the problem. Of course, you can go very deeply in this debate, but certainly one of the problems we were experiencing during the crisis that we were getting some kind of, especially in 2009, early 2010, before we really started to come back to the growth, we were getting back some kind of a backslash. By the way, similar as it's going on in Greece, that people and businesses, they have difficulties, they are in crisis, they have problems, and then comes the stupid governments and it raises taxes. I mean, how comes? And of course the reaction is, okay, if that's your attitude, then I'm not paying taxes. So in fact, shadow economy was growing during the crisis. First because, well, objectively, it was more difficult for companies to survive. Second, because there was this backslash saying that it's a bad idea to raise taxes during the recession, to cut expenditure during the recession. So that if that's what we are doing, then we are not paying. And it was a serious problem, and that's why we also already in August 2010 we prepared a plan to combat shadow economy, and we are implementing it ever since, and it's not easy. Well, we know all those debates about zero declarations, with tightening regulations of bringing in excise goods from third countries, on imposing some new measures on limiting VAT fraud, like this reverse VAT payments for construction sector and so on. So, I would say we are still in this process and still fighting the shadow economy. Right now, putting emphasis also on dealing with envelope payments, dealing with illegal employment, and certainly we need to work to continue to reduce shadow economy.
I have a question about euro adoption. We've known all along that the inflation criteria is going to be key for whether Latvia can adopt the euro in 2014. It looks like it's going to be a close-run thing, whether we are below the line or above the line. What happens if we don't formally fulfill the criteria? What happens with Latvia? How do we develop further? When can we join the euro after that? And I'd like to hear from all the panelists. Thank you.
Okay, well, the short answer is if we don't meet the criteria, we do not join.
But, I mean, in terms of development further on.
Well, certainly it has implications, and well, government's opinion on this is that we think that euro adoption will be helpful for economy. We think it will be helping with attracting foreign investments. It will be helping as a signal about financial and economic stability in Latvia. It will be reducing transaction costs to the businesses, and so on and so on. So we think Eurozone adoption is a good thing. It's also to the extent already priced in our interest rates we pay to service government debt. So if we do not join, well, not that it's a catastrophe, we are not in Eurozone and yet fastest growing EU economy, so it's possible to live without euro. But certainly there will be some negative implications for the financing costs. Certainly it will be seen as a deviation from our exit strategy from the crisis, so there will be more questions from investors, from financial markets. So we would expect that it would have some, well, maybe not big, but modest negative effect on our growth prospects. So it's not a catastrophe. We had been postponing our euro accession many times. First date was set January 1st, 2008, and it was moved to 2011. Now it's moved to 2014. But I do hope that we will be able to finish this job in 2014 and actually join Eurozone.
I was hoping to the last one after the European Commission, but I think I very much agree to what the Prime Minister was saying. I think we need the euro, and I think I think of course there are risks, and there are costs, but overall, if we are smart enough, we can gain from that. And even if you assume kind of the ultimate kind of the bad scenario of Eurozone falls apart, then it's better that we are within the Eurozone at that moment. Okay, so it's a bit weird, but even if we know that Eurozone is going to fail, it's better to be part of the Eurozone. One of the reasons is that, of course, Eurozone as such will not disappear. What may happen is that the weak countries may get pushed out. And then the strong ones, of course, will form something similar to the Eurozone that currently is there, but with the countries that are much more similar. And that is going to be the source of stability at that time. And if you are within the room, who is within the Eurozone, then you can say, okay, the weak guys leave, we stay. Okay, and we have the credibility, we have the stability. If we are outside the room, then what we would say, we would ask, could you please accept us? And they may well say, no, the markets are so volatile, let's wait for them to calm down, and then within 3-5 years, when we fix new master criteria that are a bit odd again, then we will see whether you can join. So in a way, whether the scenario is very good or whether the scenario is very bad, with the current history and the track record that we have had in the choice of fixed exchange rate, the best thing is to join the euro. And the quicker we do that, the better it is. If we do not manage to get into the Eurozone 2014, and the reasons they are multiple. One of the things is that nobody really knows how the criteria are being created. Okay? Which countries are included, which become outliers due to some kind of magic, who knows? Okay? So the best thing what we can do is try to meet all the criteria in the most harshest way that is possible. And timing currently is also rather good because if you talk about inflation, then when the economies start to recover, the inflation is going to be rather quick. And within the countries, within 27 countries that are in the Euro, within the European Union, there are always going to be an odd bunch with very low inflation. And if these countries are being taken as a reference value, for instance, as Greece now, what can you do? You can never meet those criteria. So at that time, what you would need, either to wait for the next recession in Europe, or you would need to slow down the economy artificially to have low inflation, which is, I'm sorry for the wording, which is stupid. Okay? So this is a very good chance currently, without artificially slowing the economy, to get into the Eurozone. And I hope we will be able to do that. In the case, if we don't manage to do it, well, we continue as before. The key is to make the economy strong, and if the economy is strong, and if the markets do see us as a strong economy, it's not going to be a problem. But the problem is going to be that we do not reap all the benefits, but we have the costs, because we are still fixed to the euro, but we still have loads of other costs that will slow down the growth. So we, I think, need to get into the Eurozone, and the sooner, the better.
So, Gabriele, should Latvia join the Eurozone even if the Eurozone is collapsing? I think I quote Mārtiņš correctly.
I will answer only the first part of your question. So Latvia should join the euro. It's an obligation, and it's an interest for the country because, as the Prime Minister said, there are many benefits of joining the euro. Now, the question is whether you're ready to join the euro. And readiness, of course, will be assessed by the Commission through the so-called convergence report. We are going to issue one in 3 weeks concerning the regular one. In fact, we will look at the situation of all the countries which have a derogation, so don't have the euro, on the basis of the current situation. Now, the assessment of the criteria, of course, is not easy. The implementation of the criteria is not easy because the treaty has been devised 20 years ago, and there are always new developments in the economy, new situation. We have negative inflation some time ago with program countries. What is important is how these criteria are implemented, and I must say that I think there should be no doubt on any corner that there is a bias in implementing these criteria just with the objective of keeping somebody out. Still, one lesson of the last crisis is that and I've been repeating this over the last 3 years, it's very important to be ready, not only to enter but to survive in the euro, because the euro is tough. And that's why it's important to look very carefully, as we are already doing for years, on the aspect of sustainability. So looking at the criteria, of course, is important, but one has to see what is the trend. Now, the trend, it's you made a lot of progress in the last years. You got very, very close to a number of criteria. One, however, is to make sure of, I think that's why it's very important what I was saying before, that you can deliver that standing only on your feet, not without the support of the partners. In fact, that's what happened until now has been very good progress, but everybody who knows the situation in Latvia knows also that you've been supported. So that's why it's important over the next 2 years to do, let's say over the next year and a half at least, if you want to join the euro in 2014, which we'll have to see whether it will be the case, whether it's possible when we do the assessment at the right time, that there is a continuation of an effort. Now, one has to take into account that this effort has to be done for the country, not for the euro. It's very important for you to be sound and solid whatever happens. And so that, I think, should be the first thing in mind. Then, of course, joining is, allows you to get the benefits as soon as possible. As also was mentioned before, not joining immediately if the underlying trends are very positive means that you might be able to fulfill immediately afterwards. So it doesn't mean putting everything away. We strongly support your intentions, but still the assessment cannot be done now. It will be done at the right time if you are close to fulfill this criteria. So the only encouragement which I can give you, given that there is no assessment yet, is please continue to do it, and don't underestimate the fact that although figures might be better than one expected sometimes ago, that troubles might happen or difficulties might come later, and therefore it's better to have as much safety as possible. However, by taking the measures which are sustainable and which cannot be perceived as kind of shortcuts in order to just fulfill the criteria.
Right, we're coming up to 8 o'clock. Yes, Ambassador.
Thank you so much. I mean, it is really very important that support what told the representative of the Commission. No?
Oh, have you got a green light?
Yes. I support really what the representative of the Commission told. It is very important for Latvia to have as an objective to enter the Eurozone, and she made a lot of efforts and she has to pursue. But I would say also, to come back to the beginning of your speech, Mr. Prime Minister, I understand the sequence and the relationship between stabilization and growth, but what are the instruments, what are the tools you will raise to have more growth, and what is a part of the structural funds as long as you have the assistance of EU in this growth, please? Thank you.
Well, as regards some instruments for growth, of course, we see that we need to have attractive business environment in order to attract investment, to promote industrial production, also with the support of EU funds programs. Also, now we are working on industrial infrastructure program, so there are a number of programs. Also within existing within existing budget restrictions which we have, we also should think about lowering taxes. Currently, unfortunately, we have the highest taxes in Baltic states, so, and we are directly competing with other Baltic states for investment. So in this sense, of course, we should be more or less at the same level if we want to be competitive for attracting investment. As regards EU funds, certainly it's a very important instrument which we had used, I would say, with a degree of success during the crisis. In fact, when we were cutting many other expenditure, we were raising up our share of EU funds co-payments in order to actually be able to absorb the funds and use them efficiently as an economic stimulus during the crisis. And certainly we expect that this will be an important part also for the development after 2013, so for the financial perspectives 2014-2020. And in this sense, even though we are sitting in European Commission premises, so I shouldn't be too harsh to the Commission, but certainly we are not very happy with the Commission's proposal on EU funds with 2.5% of GNI ceilings they are putting, which effectively means that we will lose almost 20% of our cohesion envelope. And a similar situation is also in Estonia and Lithuania, and certainly we don't see why Baltic states are singled out for cohesion cuts where other countries are receiving huge additions, so to say. But certainly those negotiations on financial perspectives are continuing now, and we had been already raising this issue, and certainly we'll be discussing, so to say, more of it.
Anders, we've got questions of euro accession and economic growth very much hanging in the air. As our keynote speaker, would you like to say a few last words on those subjects?
Well, I would rather like to put a question to Gabriele here and on this theme. And I wanted to check the facts with you. You will issue a report, the European Commission, together with the ECB, am I right, in March 2013, whether Latvia will be ready or not. I'm wrong on that. And then follow up, if you, in your report, are in favor of Latvia, saying that Latvia is qualified, as is normally happening, you have a second decision that is being made by the Eurozone Ministers of Finance and by the ECOFIN and by the European Council in June 2013, if there has been a positive answer first. And how much political leeway is there in that decision? So far, the ECOFIN and the European Council have acted in accordance with the European Commission and the ECB. What leeway do they really have to say no if you say yes? Thank you.
Well, okay. First of all, on your first comment on March 2013, there is not such a calendar because the Commission has an obligation to produce a report every second year, and that's exactly what we are producing now. It will come out on the 30th of May, and it's a separate report, but produced at the same time by the Commission, the ECB. Now, what the procedure is, of course, in the period in between, a country which feels that it's ready for, wants to be assessed, can ask the Commission to produce a report. Then after that, the procedure is the same, and which is the Commission, if it thinks that the country is satisfying the criteria, and in the view the Commission could join the Euro, the Commission can make a recommendation to the Member States. There is several steps, Eurogroup, ECOFIN, European Council, and back to the ECOFIN, in the Eurogroup formation, if I'm not wrong. We in fact have to decide on the basis of the Commission. Now, as you said, when we proposed until now, it was always followed, but I'm afraid that I've had my own personal experience in 2003 when we proposed to take measures vis-à-vis France and Germany to the Council, and then the Council decided not to follow. So the Council has a total freedom in this, of course, cannot take decisions completely different, but it can take yes or no, or not to decide even. That's the decision of the Constitutional Court in 2004. But so that's the freedom, and I think, first of all, I don't have any clue of what will be the position of the Commission, even in 3 weeks, even if I worked on that, of course, but it reaches higher levels. And then, and still there is all discussions internally, and then, of course, until next year, we don't know the economy, and we don't know whatever country will be, we don't know how, whatever new problems will be in implementation and interpretation of the treaty. So, I mean, making foregone conclusions on how we will behave, how the inflation or the other criteria will be, and how there will be the political feeling around, that's, I think, far beyond this discussion. Still, I mean, what I try to point out is that there is a very clear interest from everybody to make sure that the countries, they come into the Euro in a way which is good for the country. It's not like to make a pleasure to us or not. It's a benefit for the country, but the country has to manage itself. And therefore, the assessment is deep. The assessment looks at the sustainability. We've done it in the past. We've been criticizing or attacked by a neighbor, saying that we were using the criteria, but in fact, facts have proven very correctly that there was a totally unsustainable situation in the country. So the onus is on your side, on the side of Latvia, let's say, to make sure that it's really proving that it can come, and it's really done all the effort, all the homework in order to join. So that will happen. Now we're making this assessment. I can anticipate already there's been significant progress. We know very well on all the fronts. If you look at the previous convergence report, how disastrous almost the situation was and how much it is improved. As I can say, I mean, it's just really, I really hope personally that there will be a continuation, but I cannot give any conclusion yet.
Gabriele, thank you. It's now a little bit after 8 o'clock. It's quite warm in here, so I admire the ladies and gentlemen who've kept their jackets on. You can insert your own joke about overheating here, but I think whatever the cause of the heat, the answer is probably a cold drink, and I believe that and our hosts have arranged a glass of wine for after this proceeding. So let's move the discussion over to a bilateral basis over a cold drink. And one point I should make is that now that we have the Latvian translations of this book available, I believe that the authors are also going to make themselves available to sign copies of it. So seize this historic opportunity and then have a drink.